Hello, welcome to European Open Briefing for Thursday, September 6th. I'm Rafa Boyajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. We are seeing a bit of a pullback in the US dollar. The dollar index has retreated from 2-week highs earlier in the week. This comes mainly on the back of a bit of a rebound we're seeing for the euro and the pound. So we did see that rebound yesterday. This morning we can see the euro is marginally weak against the dollar around 1.1624. Sterling though is slightly extending its gains. It's now comfortably above the 1.29 level. So sterling's rebound came amid reports that the UK and Germany are close to finding a solution to help that impasse in the Brexit talks, but trade concerns are the main focus for the markets still. We've got that deadline today when public consultation period ends on the 200 billion worth of tariffs on Chinese imports, and we could hear a decision by the White House on whether or not those tariffs will go ahead potentially in the next few days. Does seem to be some progress in the NAFTA talks. US and Canada have made progress, though we did have the Bank of Canada decision where they held interest rates unchanged, and the Bank of Canada put a greater weight on the trade outcome on its policy decisions. So the loonie is stuck near 7-week lows. The Australian dollar is down sharply. We had 2 more banks in Australia raising their mortgage rates. So this increase in mortgage rates by major banks there comes despite the fact that the RBA has held interest rates there unchanged. So despite steady interest rates by the central bank, we're seeing increasing costs for Australian households, and that could further delay a rate hike by the RBA. So that's weighing on the Aussie, which is down by around 0.2% at 0.7176 against the US dollar. There's a bit of an easing in the slide in emerging market currencies though. But if we look at equities, we can see Asian indices closed all lower this morning, and in Europe, it is most indices there are also lower. Yesterday, we saw sharp losses on the Nasdaq. If we look at commodities, we can see gold prices are up, mainly on the back of a softer dollar, but there does seem to be strong seasonal demand for physical gold, and oil prices are slightly lower, extending their losses. So it doesn't seem to be that the US hurricanes that were heading towards the East Coast doesn't seem to have had much impact, and we're seeing many oil platforms reopening, and we also have the EM crisis as well as the trade uncertainty dampening the outlook for oil demand. So we're seeing weaker oil prices both in WTI and Brent. If we look at the major performances, we can see gold is the best gainer this morning, followed by the pound, and at the bottom of the table we've got the Aussie dollar. Looking now at the dollar index, we can see it did fall to near 1-week low before rebounding a little bit to around 95.18. Weaker Wall Street also somewhat weighing on the greenback. Yesterday we saw a big sell-off in technology stocks as the executives from Twitter and Facebook appeared before Congress amid greater congressional scrutiny on tech companies and how they deal with problems in social media and fake news and so on. But the main focus remains on trade. So NAFTA doesn't seem to be doing too badly at the moment, but everyone wants to know what's going to happen with that additional 200 billion worth of tariffs on China, whether or not Trump will decide to go ahead with that. So looking at the Canadian dollar, it doesn't seem to be appearing to be benefiting that much from the progress on NAFTA. Bank of Canada yesterday perhaps may have added to the downside for the loonie. So although they clearly signaled that further rate hikes in Canada are needed, they also said that they are monitoring closely the course of the NAFTA negotiations. So if there is no deal, an October rate hike could be out of the picture. At the moment, Loonie is trading around 1.3187. Trump, though, has said that he does expect an outcome on the NAFTA negotiations in the coming days, so that's going to remain in the focus. Quick look at sterling. We can see that spike there yesterday amid Bloomberg reports that the UK and Germany have agreed to drop key demands that were stalling the Brexit talks. So this makes a deal at the October EU summit more likely, and it's also being reported that there's been some progress on the Northern Irish border issue as well. Despite that, though, the risks of no-deal Brexit are still seen as too high, so that's why we're seeing only very limited lifts in the UK pound whenever there is some positive news in the Brexit negotiations. We can see that the pound didn't even manage to break the 1.30 level, and it's now eased back a little to around 1.2915. Looking at what's coming up later in the day, the focus will be on the ADP employment report, which should give some clues to tomorrow's non-farm payrolls report. We're also going to have the ISM non-manufacturing PMI as well as factory orders. Plus, New York Fed President will be speaking again today at 14 hours GMT. That's it from me. Thank you very much for watching and have a great day.